We're live. Let me just do a quick double check. Okay, beautiful, beautiful. So, Frederick, thanks for coming on, man. I actually just discovered Robin Markets, and
Mhm.
I was really interested in the idea because I think the idea of providing yield for polymarket positions is obvious, but I don't think anyone has actually like done it. And
Yeah,
to be honest with you, I didn't go into Polymarket thinking like that was like like intuitively I was like, oh, you can LP, you can market make, you can, there's but I actually never thought of providing yield on Polymarket positions. So I think it's fascinating what you're doing. You're backed by some huge people. And you just recently raised, I think, upward of 400K, which is
yeah.
great. I mean, congratulations on that.
Thank you, thank you.
Uh, and yeah, I'm super excited to have you here. And maybe if you want to kind of give an intro to yourself and what you've been working on.
Yeah, absolutely. Great to be here. Thanks for the invite, John. Been a follower of Polyfactual for quite a while. I think I have some of your guys' tokens as well.
Oh, nice.
Um, because they were required to use the app right back in the. Are they still?
Back in the day, they were required to use. We had like an alpha thing on our site, and then we had like an AI, like a AI thing, and you needed tokens to
Yeah,
use it. People are still using that. I mean, we've kind of we've since then we've launched like a whole bunch of other stuff. So the project kind of fell by the wayside, but people are still using it.
yeah.
So
I still have my tokens from then, so I've been following you guys ever since, of course. And yeah, just to give a quick introduction on myself, I would say that I'm like first and foremost a trader and a market enthusiast. I started trading my own money when I was 15 years old, betting on sports. From there, went into poker and then got into crypto, started trading equities, derivatives, whatnot. Went to university to study finance as well and kind of thought that I would make a career in finance, but quickly discovered that I don't really enjoy working for other people, and I might have some authority, let's say. So I've just been, acting kind of as a rogue, setting up businesses here and there, doing a lot of advisory work, trading my own money, until I stumbled upon prediction markets back in 2024. And what excited me about it was actually something very niche. It was actually futarchy that excited me about prediction markets. And me and my co-founder, we initially wanted to build a futarchy trading platform for EVM-based DAOs, which now in hindsight sounds kind of ridiculous because it's like a niche of a niche, which, yeah, I guess like nobody really wanted to use it. We built a beta and we had some testers, and it was a huge uphill battle, let's just say. But throughout that whole process, we, of course, traded a lot of prediction markets ourselves, and we kind of stumbled upon this issue of a lot of the sort of higher quality markets. A lot of the markets where you have very interesting exposures are very long dated. So one example would be back in last fall, me and some other people were talking about betting on the supreme leader of Iran being out this year. And we kind of wrote together like a thesis where we looked at the average age of a male in that region of the world, and we tried to factor in like the additional stress of running the Iranian government and country, I suppose. And we thought about, okay, different like heart conditions and stuff that could emerge which would effectively take this guy out. But at the end of the day, we passed on that bet because we're like, okay, but there's no way we're locking up our money for like 15 months. And that's where the idea kind of came from. It's like, okay, if there's a bunch of locked up capital in prediction markets, how can we make that productive? because Polymarket is on chain, right? There's not as much friction to do stuff with these things, use them for different things. So that's where the idea came from. And the idea really is as simple as that. It's like using locked up positions to generate more returns for the holder at the end of the day.
Yeah, I mean, you're so on point with that. I mean, I skip a lot of markets just because that are good opportunities. I mean, like some of them are like I guess like some of them you could call bonds,
Yeah,
but they're great opportunities, and I skip them because it's like, okay, well, this will resolve in like 2 weeks, and I'm like,
yeah,
okay, well, why don't I just do perps?
yeah,
So that's basically my logic there. So I think it does provide a huge use case in terms of people being able to get in on these positions, these like strong investment theses,
yeah.
um, and just and make these more long dated bets. Um, in terms of like, I know you already have users
Mhm.
because I went on your site. It looks like there's activity. I think you guys launched in April 15th, if I'm not mistaken.
Yeah, so we launched a private mainnet April 15th, and we recently brought the application like live for everyone. Basically, now it's public, anyone can access it. And we have, I think, just around 100K of TVL right now, which is not a huge number by any means. But working on actively growing that as we speak. And I think one component that goes into this, which I didn't foresee from before, is actually the trust building aspect.
Mm.
Like we talked about before we went on stream, going with PFP or going with camera on. And I mentioned to you, John, that I've never gone camera on before. This is the first time. So hey, this is a big reveal
Which is
here.
awesome. You get to see this Polyfax right here. You
Right,
get these
exactly.
reveals.
And that kind of led to a lot of the larger players that would actually be staking multiple six figures or even more. They're very wary of doing that because they don't know who I am. They don't know if I'm even a real person. What I've done before. So if I just, let's say we just run up the app to a couple million in TVL and then we just rug it all, that would be hugely profitable for us. Of course, it's not something we want to do, but I kind of get the perspective of the user that, hey, there's a lot more trust building that's required to go into this, which is what we're working on right now. And we've, of course, we've published all of our smart contracts. We've done security audits, which are also public in your documentation. Anyone can read them. And now we've added in I guess, more institutional investors as well into the equation, which I think helps bring some more trust into this. But we're targeting 1 million in TVL very soon. And I think it's a snowball thing as well, where you convert a few of the bigger guys, you're going to convert a bunch more people. So that's what we're working on right now in parallel with lots of new exciting things. I can say that we have some new yield sources coming in soon, which are going to significantly increase the yield and bring some really good farming opportunities to our users, let's say. And we have a bunch of integrations coming as well. So working hard on the distribution and the yield side right now.
Yeah, and I think you brought up like a really good point. Like this isn't only true for staking protocols. This is true for like copy trading protocols. This is true for basically any DeFi based protocol where users are depositing money or something like that is this trust barrier, which is huge to overcome. I
Yeah.
actually started a protocol like before Polyfactual, I started a protocol called Raise.win, which was a
Mhm.
little bit like vault based copy trading. There was a launch pad involved. Like you launch trader tokens and then the tokens follow the traders. But even with that, there was like huge amounts of trust that I had to get over. I had no
Yeah.
one supporting the project. I basically was just a solo dev, and I thought I could just spin it out and people would come, and they didn't. And
Yeah.
I think that was the reason why. And especially now, right? So you had like the Dolomite stuff, right? With that with World Liberty Fi. I'm not sure if you have
Mm.
trust issues with that. Apparently, some people are questioning, like, is World Liberty Fi slowly rugging Dolomite by taking out lending, based on their collateral. It's not exactly
Right.
the same as your project, but I could see how that would create distrust in the space right now. We're at an all-time bearishness for DeFi.
Yeah.
How are you handling that? Like, how are you finding? Are you finding this a difficult hurdle to get through, and what are some of your strategies you're using right now to get over that?
That's an excellent question. I mean, you're right. This has probably been like the worst time in history to launch a DeFi based staking protocol with everything that's been going on for just the past, I don't know, 45 days. We had like
Yeah,
hundreds and hundreds of millions of dollars in value destroyed through hacks, and reputable, very reputable protocols such as Aave being affected, even though they didn't get hacked directly. Just having that RSETH as an available collateral just kind of fucked them overall. Excuse my French, but I think the way we are approaching it is, of course, like for these initial strategies, we've decided to work with Yearn Finance, as you can see there on the application, and we are focused on stablecoin lending strategies. And those are some of the most liquid strategies you can have. Unfortunately, the trade-off is that they have very low yields, right? The yield right now is about 2.5%, I believe, which is why we are like guaranteeing this top up to T-bill yield to get to 4% just to make our users happy, because we know this is not going to be forever. It's temporary, but it's a bad situation right now because utilization is low, yields are low, but Yearn, they are an amazing team. They have a great track record when it comes to security. The underlying vaults highly secure as well. So that was kind of our approach for this initial launch, was trying to work with some of the most reputable actors in the space. Now, as we move forward, and as I mentioned, like, okay, we want to add more yield strategies, I think the interesting part becomes the yield sources themselves. So we're looking at, I wish I could say, but I can't say quite yet. Well, we have to do another stream. But what I will say is like yield that comes from TradFi, essentially, and how we can integrate that into our product, working with some of the most exciting companies right now in DeFi, I would say. And I think there will be more on this very, very soon. But I guess it would be an approach of like diversification and reputable actors. And there's only so much you can hedge, right? Oh, they had this liquidity crunch. I believe they solved it now. It's going to be fine with this DeFi United thing. But even if you're staking stable coins in Aave, you suffered a liquidity crunch that lasted for, I don't know, a few weeks, which can be detrimental, of course, if you're staking Polymarket positions and you can't withdraw because there's a liquidity crunch. So what we're also looking at is adding like an aftermarket where maybe we buy out users' positions to create additional liquidity. Would there be a liquidity crunch, let's say? So those are some of the things we're doing right now to kind of try to mitigate and hedge for these types of situations.
yeah. I'm curious too. In terms of your users,
Mm-hmm.
who are you? Because right now I'm seeing like a lot of activity for
Yeah.
an early protocol, right? I was actually surprised. I went on your site, and you can actually see the market activity here. Um, let's see if it loads.
Oh, that's bad.
No, no, no. Yeah, there is activity right now. My internet doesn't seem to be working, but uh, what I was saying is there's like a lot of people who are
Mm,
staking right now,
mm.
and I'm just curious, like, what are the users that you're seeing are coming to your protocol? Like, what type of prediction market players are coming to your protocol? Are they whales? Are they smaller players? I'm curious if you've noticed any trends already.
Yeah, that's a good question. I think
Oh
at
yeah,
this
here it is.
point,
It's showing up right now.
oh yeah, I don't know. Sometimes it bugs out. I think we'll have to take a look at that. Actually, let me make a note. while I answer. Um, yeah, so I think that for the large part, it's smaller players right now, um, and these are people staking in. So I've seen like the World Cup in football, like soccer is one of the big markets. Then you have the Trump Greenland market has been popular as well. So it's like fairly long dated market. But you had some guys also stake for a few days at a time. They were trading these mega ETH FDV markets and the printer sale markets, and you had those guys stake them just for a few days. So I think people clearly see the value in just getting the money, even though it's just a few days. You'll only make a few cents on $1,000, but it's still a few cents that you otherwise would not have made, right? So we're making the traders more profitable, and I think smaller traders are often more prone to be open to experiment with new applications, which I totally get. Like the bigger guys who've actually fought very hard to get into the multiple millions, they tend to be a little bit more protective of that money from a mental standpoint, at least. And I think we are well on our way of onboarding some of the bigger players, but still in that sort of trust building phase. And I think the core user right now is someone who stakes like a few hundred or a few $1,000s at a time, is what we're seeing.
Yeah, and I'm also seeing exactly what you're talking about, right? Or what you mentioned earlier, like people are staking on the election. Who's gonna like these more long dated markets? I'm like OpenSea FDV, above 3 billion. I mean, this is a market that's dated to December, I think. I'm not quite sure, but I am seeing like
Mhm.
longer term markets.
Yeah.
Um, how do you think this compares to providing liquidity on Polymarket in terms of it's kind of like a two-sided question because on the one
Mm.
hand, do you think that like do you have plans on becoming a market maker? Because or like, how do you see this conflicting or working with providing liquidity on Polymarket?
That's a really good question. I think that market making on Polymarket is very difficult. Actually, it's and that is partly why the order books are so thin. Is because it's a tough game to figure out, and market makers always have to expose themselves to these toxic flows. Right, when someone actually has the insider information, they can just buy up the entire side of the order book on whatever they know will happen or already has happened. So market making is a tough game, and I think initially we were very interested in it, and we were interested in looking at building like a market making vault that would provide liquidity and people could stake USDC in. Right now, we're not really considering it anymore. I think we've been talking to some of the bigger funds, and it seems like they are coming. They are stepping in soon, if not already, and I think they will eat the lunch of a lot of the current market makers, which are mostly like just some guys market making from their house, I believe. Very talented guys, very good guys, but it's tough to compete with Citadel, Jump, Susquehanna. So market making not really something we're looking at right now. What we are looking at is some of these arbitrage plays where I just had a conversation with a fund yesterday who kind of found a profitable arbitrage strategy between multiple venues, but it entails sometimes getting kind of locked up in that arb because you have to wait again until resolution for them to 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 be able to cash out the positions. In those situations, I think our product can bring a lot of value because it makes strategies far more profitable if you can have an extra 4, 5, 6% APY on top of whatever ARB you're locking in. So I think that's more so the direction we're going into right now. I do think there are a few ways more liquidity can be locked up or like freed. How do you say unlocked that are not being done right now. So I know there's some players doing lending, like borrowing against positions. trying to set up sort of a money market for prediction markets. I think there's still a few more ways to be able to unlock liquidity that are not being done yet. And I will say that is something we're looking at for a next step as well.
Yeah, almost like, you could almost see this as setting up like, okay, like someone comes to your protocol, they stake their positions, and then
Yeah.
maybe there's like another position that, like maybe you could do, man, what is that called? Like liquid DeFi or something like that. I actually forget the term of it, but kind of what Agent Layer was doing a little bit.
Yeah.
Maybe there's an opportunity there, but and yeah, so it definitely seems interesting.
Yeah. Yeah, I think, and it's funny, we it feels like the opportunities are already gone because prediction markets is so popular right now. You have South Park doing episodes about it. You have like it's just everywhere, but actually the markets are still super early. I think there's going to be a lot of opportunities coming up over just the coming years in these markets.
How does the staking? So I dived into the documentation a little bit. Um,
Yeah.
and it's really interesting how you actually get the like facilitate the process. I'm
Hmm.
wondering if like maybe just for people watching, could you like break that down like as a for some of the traders without you don't have to get too into the technicals, but I just thought it was interesting because it's not exactly a natural process to go from a polymarket prediction position to USD
Yeah.
and yearn.
Yes. Um, it's a good question. Yes. So basically, what we do is we built these pools that are smart contract based where users can send their tokens. That's where the positions go. They go into our smart contracts. We can't do anything with the positions. We can't interact with them. They're all smart contract driven actions, and the user can call back the positions at any time. But what actually happens is the contracts will try to match up as many opposing positions as possible. So if I'm betting on one thing to happen and you're betting on it not to happen, the contract will pair us up into one yes and one no effectively. And then these paired up tokens will be taken to the Polymarket CTF contracts, where, and most people don't know this, there's like a mint and a merge function in there, where at any time you can take a USDC and you can mint two opposing tokens. And you can do the opposite as well. You can take two opposing tokens and you can merge them into USDC.
Hmm.
So we call the merge function, right, with these matched pairs. Take out the USDC and then we deploy the USDC into Yearn. And similarly, if somebody wants to unstake or if a market resolves and tokens have to be called back, we take the USDC and we mint back the tokens and send them back to the users. So we never really interact with the order book itself. We just interact purely with the smart contracts of Polymarket. And in this way, we are able to make these positions productive without taking on additional leverage or introducing liquidation risk into the equation because they're always paired up with someone else. Now, the hard part is how do you make sure that the pools are somewhat balanced at all times? And we're looking at that from a few different angles. I think one thing is, of course, the distribution, just getting in front of as many people as possible to get as many people staking from both sides. Second is incentives, like okay, incentivizing the sides taking more risk. If you are staking a bond at 99 cents and that requires someone to stake a 1% token, maybe they have to be compensated for that extra risk they're taking. And then it's also like looking at partnering up with market makers who will actually like actively check the situation in the pool and see where there might be edge in matching up more tokens. So those are some of the like angles we're looking at this problem from. But otherwise, I think it's a pretty unique approach, and it's definitely it's just like enabled by the structure of the smart contracts. at Polymarket, which I think is a fantastic design. We actually have, as one of our angel investors, is one of the designers of this framework from Gnosis, Stefan George. They designed this conditional token framework, I think, over 10 years ago, which would then ended up being used by Polymarket now. So I'm a huge fan of just the design that's gone into this.
Yeah, that I like. I mean, I've always been a fan of how Polymarket has been like a kind of like a decentralization first approach, and they do a very good job at that. And you can directly connect with the smart contracts, right? Which is
Yeah,
really cool. A lot of people protocols don't allow you to do that, or they get to a certain stage and then they start blocking it off and trying to make themselves a little more centralized. So I
yeah.
think it's like super convenient that they have this merge. I actually this is the first time I'm hearing about it too. So I think it's I think that's a great thing. Could you do this with Kelshi, or would you run into issues, or have you guys looked into that at all?
Yeah, so I guess the problem with Kalshi is that they are basically off chain, and they do have an API on Solana where you can interact with their exchange through like on chain, but so far this API has not managed to get a like a it has around 900k of open interest, I think, which is not a large amount. um I think you could do it if you, but you have to do a lot of manual work to get it done. We've looked at it. We're not doing it right now. We are partnered up with Polymarket for the foreseeable future. But Kalshi is interesting. I think another thing with Kalshi is they are very sports focused. So the vast majority of volume on Kalshi is in sports markets, which is also a little bit different. Like when it comes to a staking product, it might not make as much sense to do that. But in the future, maybe.
Yeah, that's actually very interesting. Like there must be some markets that work really well with staking, and there's probably some markets that don't work at all.
Yeah.
I'm curious about what markets would you that just simply do not work with staking. Like maybe theoretically you could do it, but probably not a good idea. Like you might lose money if you try and stake and you're holding a position in these markets. I'm curious if those exist.
Well, it's a good question. I think most markets work well. It depends more so on the trading style. If you are trying to do a very short term trade, like some sort of momentum trade, or you expect something to happen soon, it's probably not a smart idea to stake because you never know if there's like liquidity constraints. In most cases there aren't. In most cases it's fine. You'll have like a 5-second latency to be able to like go from stake to selling it on the order book, which is not a lot of time. I think 5 seconds should be fine. But in those cases where you're expecting an immediate move, I think it might be too greedy to stake. It's more so if you're holding until resolution, which about half of the tokens bought on Polymarket are held, I think then it makes perfect sense to stake, even if it's a short-term market, because over time that will still compound, right? And you'll make more money than you would not staking. So if you're holding until resolution, another thing could be if transaction fees are added somewhere in the value chain, then of course you will have to consider that. If you only want to stake for a day, maybe the transaction fee will outweigh the yield you make on staking. So right now there's no transaction fees involved in our entire operation, so you can stake for like a minute and it will still be worth it to do it. But if that changes someday, then that might be a consideration as well.
So, yeah, it seems like from my takeaway, just going back to a point you made earlier, market making is really tough. So,
Mm-hmm.
like especially like even with the Autobots, it's tough, right? If you get
Yeah.
filled, like it sucks, right? And it's really hard not to get filled unless you have a super fast. We for Polyfactual, we built an auto market maker that kind of like checks intervals every 30 seconds.
Yeah.
But if you start checking it like sometimes like for the hyper volatile markets, it still doesn't work. You're going to get filled. So I do see this as like a really good solution to that, right? Like I can
Mm.
earn those rewards without having to get into that craziness.
Yeah.
So I definitely see the benefit there. Um, so in terms of like building a business like this, like like just to get into like the founder kind of
Hmm.
building portion of this, what what does it take to like create a business like this? Like what do you need as a prerequisite? Like if you're just some guy off the street, you probably can't build this bit. Like, because like for all the reasons you just said, you need
Yeah.
trust, you probably need some upfront capital.
Yeah.
I'm just curious, like how how big is the moat there for a business like this?
Yeah, that is a good question. I think for a business like this, you definitely need some level of domain expertise or some like understanding of financial markets and ideally of the user, and also like a lot of engineering, a lot of expertise in engineering. Right? I'm the non-technical out of the two of us. My co-founder is a computer scientist and engineer, very very good engineer, and he's built all of the code base essentially. Now we have a third person who's joined us as well. He's more of a back-end engineer, quantitative researcher, and I think like it's a simple concept, right? The idea, but actually building it on chain in a trustless manner where our smart contracts are public and transparent, and we're keeping track of God knows how many positions over time is a huge feat. So I think you need engineering expertise, you need understanding of finance, and then ideally some upfront capital, like you said. We went self-funded for a long time until we raised this round, but I think yeah, maybe we should have raised earlier just to try to bootstrap the trust more, because actually having raised money, I think a lot of people perceive it as a huge booster in credibility in just who these guys are. And me personally, I went, like I said, no camera for a long time because I used to live in a country where tax records and stuff are very public. So it's easy to find, kind of like you've seen in France, these crypto kidnappings was a similar phenomena there. So it's like, okay, I don't really want to be public about what I'm doing when it comes to the crypto aspect of things. So otherwise, I think building a business on top of prediction markets is a good idea and it's quite feasible. But how do I say this in English? I'm trying to think. Like I think it seems easier than it actually is. So whereas the instruments are semi-clear, yes, no, binary instruments, there is a lot of complexity that goes into it from a market structure perspective, and understanding that and finding problems to actually solve. So I think what we're seeing most is people trying to build trading terminals, right? Because there is kind of a no-brainer in a way. You can say, okay, maybe we can make the UX easier. But now there's like 50 different terminals. So this problem is already kind of solved, and Betmore seems to have already kind of won the race. Now I think that can still change, and there's a lot of capable teams there. But now it's probably not a good idea anymore to go into terminals. So then it becomes like a complexity game. Right? It's what is missing? It's like maybe some indexing services, maybe leverage solutions, but those are like extremely hard problems to solve. So I did, yeah.
I mean, you're 100% right. Trading terminals are low risk, I think. They're
Yeah.
low risk from a regulatory standpoint because you're kind of just providing a front end for a derivative. You're not actually creating the derivative. So
Yeah.
there's a gray zone there that you're not in trouble from a regulatory perspective. And I
Yeah.
think that we've gotten to a point in crypto culture and DeFi culture where where a lot of founders are just trying to avoid those battles.
Yeah.
Well, there's two types of founders, right? Well, three types of founders. There's, the founders like you that are doing it legit, right? Building trust.
Mm.
There's the founders that just, want a quick buck, go anonymous, scam for whatever they can. And
Yes.
then there's the guys who are just like, look, I'm just going to try and take the lowest risk path that I can possibly take, and that
Yeah.
is the terminals. So I would completely agree with you there.
Yeah. And the thing is now with terminals, maybe you can get venture backing if you have like an extremely unique idea, but mostly investors are going to say, oh, like there's already 50 terminals doing hundreds of millions of volume. Like, how are you going to get into that industry when it's kind of a, yeah, it's kind of a solved game. So I think the opportunities in prediction markets are becoming increasingly complex.
So we have one. Let's see. We have a comment here. PM Trader Adam says, "Congrats on the raise." Um,
Thanks, Adam.
it is
I
pretty impressive. I will say so. My question to you is like, as a founder with this type of product, how did
mm,
you generate that interest? Do you have kind of networks and inroads already? Because that right there, because when I go on your Twitter and I see all these guys supporting you,
mm.
that already builds huge amounts of trust. Like I'm like, okay, like that right there is enough for me to probably use this protocol. To be honest, I mean, I trade
Yeah.
prediction markets. I would probably consider like putting in some money to try this out at this point. Um,
That's fantastic to hear. I think the way we went about it was not the smartest way, actually. If I would have to do it again, I think well, I will have to do it again at some point, but if I would do it again, I would do it in a different way. So we actually went with quite a big ask first, like a multi-million dollar raise ask. And we realized that it's too premature to try to raise like several $1 million on this idea, because at that time we didn't have a product, we just had an idea, and we were two guys building this idea. And I think if you have a certain amount of pedigree, like if you've worked at, yeah, maybe you come from Polymarket, maybe you worked at a hedge fund, maybe like you have some of these labels, then you can raise a lot more. We went self-funded for a while, so we didn't really have that pedigree to back us up, which made it a bit more difficult. So we changed our approach. We went for an angel round instead. We got a few good angels involved, and those came from some like personal connections and friends, the first ones, and that kind of snowballed into more people coming in, and that then snowballed into us getting Fabric Ventures and Imoca as well, coming in with smaller tickets as sort of fitting into the angel round, let's say. And I think that approach was the smartest for our situation. Now, unfortunately, we wasted a lot of time on the not so smart approach before then. But I think what people trying to raise in the prediction market, I get a lot of people messaging me, asking me for introductions or asking me if I can maybe give feedback or help them with their raise. I think you have to get to a certain level of quality in your pitch. Most of the materials I get sent are subpar. Like there's like spelling errors, there's inconsistencies, there's like things that are just how do I say, not genuine, like putting a competition slide with some really good companies and somehow claiming you're better than them when you don't even have a product, which is it's the way to go, right? You have to somehow explain how you're different, but you also have to be genuine. And not try to say that like something that's completely unproven will be a better trading terminal than bet more because you're gonna do a Bloomberg thing or an AI thing when they're already doing hundreds of millions in volume. They have the receipts to say that, hey, we are actually better than you. So focusing and really dialing in on the materials and getting the story right and professional enough where you can, there's this thing called a mom test, I believe. And would you accept your mom's money into your startup? You ideally have to be able to say yes to that question. Otherwise, it's not good enough yet. You have to stand fully behind it. So those would be my sort of high level tips, my high level advice on how to raise money, and specifically in the prediction market space.
Yeah, I told my mom to invest in Cardano, so I'm probably not the I'm probably not the best person, but yeah, I think that's the man. Not enough people know this, but you mentioned something really good. The angel round before
Yeah.
you approach investors. I think I've been seeing more and more of that, and I do think it's a great strategy.
Yeah.
Just getting other people interested in your product, friends, but maybe like smaller protocols, like maybe even protocols in the same space, like different groups in the prediction market space, like maybe they'd be interested, but building that traction and then finally kind of going to a VC, where, bigger money, I think is a good strategy.
Yeah, exactly. And I think like it always takes more time than you would think. So if you are on a limited runway, you're like, fuck, I have 2 months of savings left. Probably it's a better idea to just get a job and keep building your product on the side until you have gotten it to a point where you can like convince investors more easily. So that's another mistake we made. We went self-funded for way too long. We should have just like you have to, because if you go without money for a long enough time, you'll also go into this kind of mental survival mode, right? Where you're sort of desperate, and investors can tell that too. They can smell it on you. If you really need the money, they can smell it on you. So you have to make sure that you can come across as if you don't really need the money. You're going to do this regardless, but it's good for them to jump on the bandwagon. Otherwise, they're going to miss out. That is kind of the angle of attack. I think a good fundraise has to have.
So I think we're coming a little bit long here. Usually, I don't know how much time you have. I don't want to run too much over. But I do have like two more questions. One question that I have for you is, do you think that, I guess this is like a common staking question. Do you think that we'll ever get into the age of like, back in like 2021? I don't know if you were there during like that, during the crypto bull market.
Mm-hmm.
All these staking protocols came up and they were all kind of sucking liquidity from each other. Do
Yeah.
you see that happening, or do you think we're kind of beyond that? I mean, part of me thinks that we're beyond it because I think the trust has just been completely destroyed. So I think I think if you build that trust, that's like a huge moat. I would even put that up to
Yeah.
like having liquidity, right? Like having
Yeah.
trust is like, or distribution, right?
Yeah.
Having trust is almost at that level now. So I don't know, but
Yeah.
I wanted to get your take.
That's a good question. I think probably it'll be different this time. I think we're seeing some of the models kind of evolve as well, where you have these like shared liquidity pools, such as Fluid, I believe. It's like LPing in lending and indexes at the same time, kind of try to make capital more productive. I think Katana, this new chain on top of Polygon, has a similar take. So I think the market structure is changing when it comes to siloed capital. Of course, there will always be some level of competition, and as long as we have, you know, hundreds of different chains, they'll always be competing against each other in a way if they're monolithic designs or even layer twos, right? I mean, they're competing, they're siloing capital across each other. So to a certain extent, but I think things are constantly progressing and getting more and more efficient. I don't see a risk for that happening in prediction markets. I think what might happen is that a third prediction market comes up and actually starts competing with Polymarket and Kalshi. But so far, they have been very strong at holding the lead, right? They've really been dominating the space, and it looks like so far no one else has been able to compete. But I just saw today, to the $6 million fundraise by Exo Markets. I think saw something like that. You never
Okay.
know who's gonna pop up and start
Yeah.
competing with the big boys.
Yeah. So I have one more question. Then I think we have one question in the chat.
Mm-hmm.
So my last question is just in general, what is the next steps for Robin Markets? Like, where do you see yourself if you get to like a 1 billion TVL? I know it's hard to answer, but let's say that happens. Like, what do you think is what do you think is the future for what you're doing?
So we want to enable traders to earn throughout the entire life cycle of a trade. So we have a bunch of more features coming out. We'll be enabling people to stake their idle balances. I know a lot of people are just holding USDC on Polymarket and not doing anything with it. And then they go into a trade, of course, at some point, and then they want to stake. We're going to be enabling staking of those balances. We're going to be enabling staking of limit orders, essentially. If you're placing a limit order that's out of the money, we're going to allow you to stake that,
Mm.
and then we'll execute it for you when it comes into range.
Oh
And then,
man,
of course, scaling up this current product as well. So we're really targeting like a full life cycle staking product where you'll have idle balances, you have the limit orders to buy, you'll have the position itself, and then you have the limit orders to sell. As much staking time as possible to make traders more money.
nice. So okay, so we have this one question in the chat. It's a bit of a long one. He says, "Hey guys, just hopping in here. Thought I'd throw this out. Spent months on the Polymarket data set for all markets and wallets. Is that something of interest to connect about?"
Hey, why not? You never know what you can do with that data. I believe someone published like billions of rows of trading data like a month ago or something. But maybe, yeah, just send me a DM and we can see maybe there's something we can cook up.
Cool, cool. Fudrick, it was great having you on, man. Thanks again for coming on. And yeah, just I'd love to stay updated. Like if you want to come on again, just ping me anytime. I'd be happy to have you.
Definitely, man. Definitely. Thanks a lot, John, for hosting. It was a lot of fun coming on and talking about the fundraising. No one's asked me about that stuff before, so
I'm
that
glad we
was
got it. I'm always afraid to ask that question because I know some people, but I appreciate you talking about it and just because for me personally, like I know we have a lot of people who are like, okay, how do I even do this? How do I even get started on this process?
yeah,
So I think it was super helpful that you talked about that.
yeah, and it's tough, right? Fundraising is not easy, and just building a company, like as well, John, is like super hard, and it's like constant moments of fucking up, and you just have to learn fast and iterate and try again and try differently. And anything I can help with in that sense, I think always feels nice to be able to share. For example, how we fucked up by targeting a way too big raise without really anything to back that up with. Now we're in a much better position. So I think those type of lessons. It's good for people to hear those, so they hopefully can avoid making the same mistakes we did.
Cool, 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 man. Well, all right. Well, I'll catch you later, and let's keep in touch in the private chats.